Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, February 12, 2025. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, quite interesting. Let's start with the thumbnail of last night's video. It was, in fact, big turn coming. Here's a picture of the ES on a 5-minute chart. You could see a big gap down from yesterday's close. This is a pit session only chart to today's open. It was about 60 points. It had the makings of a down day. But wait, there's more. We had what's called a rescue operation. The makings of the down day was on the CPI data shuffle this morning. But we had another rescue operation where the market came into the 50-period moving average, ricocheted off of it, and basically trended higher and stayed up there for the remainder of the day, closing the day above the 20-period moving average, making it above all the moving averages. And guess what? You got it. The trend is your friend until she throws your shit out the window. One more time, we'll take a look at the weekly chart. Do we have any material change on the weekly chart? Well, all in all, for the first 3 days of the week, we have what's called a very narrow ranging week. Above all the moving averages, there's absolutely nothing wrong with this tape. You have a parallel channel with the 20-period moving average and the 50-period moving average and even the 100-period moving average down here. We're not worried about that right now, but you have no curling over. You have a parallel channel. This is a strong uptrend on the weekly chart, period, full stop. Can it change? Yeah, absolutely. It can change, but it would have to morph from the daily chart. You need to get a gap down, trade lower, finish on the lows, some follow through. All of a sudden, that would change the tape, but we've yet to see that here. While the SPY was down a little less than $2 today, 1/3 of 1%, it wasn't something to make a federal case out of. We're just going to call it a down day by the end of the day. Remember, it's not how they open them. It's not how they trade them. It's how they close them at the end of the day. That's the most important thing for the daily chart. They closed them pretty well. Down 1/3 of a percent is just a down day. And all we can do with that is just move it along. There's no material change on the chart. What about inside the numbers? Well, we had some early movement after the CPI data release. So we had to adjust the numbers from the 0 dark 30 post. But the same numbers were on the board. Check it out. Flip side situation is getting below the pivot, which opens door. We adjusted the pivot. You'll see that in a minute, which opens the door for 602.40, some unfinished business. Keep that in mind. Then we have 600.40. That became the pivot. You'll see up here at 8:45, the CPI data shuffle is out. We've got movement/volatility. How about some adjusted numbers? The new pivot is 600.40. You could see here she opened below the pivot, ran right up to run a test of it, back tested it, hung around here for 15 or 20 minutes. She went up, came back to back test the pivot, and went up for the rest of the day. That was, in fact, our pivot. The definition of a pivot is where the market is bullish above, bearish below, and it's based on time. How much time does she spend above or below the pivot? Is she testing the pivot? Is she having trouble getting through the pivot in one direction or another? The pivot is important. She never got down to the next number, 598.25. Let's scroll up, see what else we have. Expanded range and volatility. The movement will be wider as they eat up more points in both directions. Adjust risk in terms of position size accordingly. Just something I like to mention when we have a big gap down. Just put that in traders' minds. Right out of the gate, I was looking for 598.25. She didn't quite get there. Came up just short right about there. I was looking for 598.25, locked and loaded in the live room along with a whole plethora of other traders. We still got a couple of trades off the books. As she bounces, 600.40 is the pivot and a target on the way back up. There's your 640, yada, yada. If she gets above 640, she goes to 602.40. There's your 60240. Did we have traders that rode it up to 60240? Yes, we did. Did we have traders that shorted 60240? Yes, they did. Where did they take a ride back to? How about the pivot at 600.40? Funny how that works. Pause the video, read the notes, go back to the chart, and double check the work. What happens if she gets above 60240? Well, we'll see it pop up here in a moment on the board. There it is, above 60240, and the door opens for the next number up in the sequence at 603.85. There it is, 603.85, target on the way up, overhead resistance once she gets there. That proved correct. What I want to know, and ask yourself this, how can you be trading without these numbers? Remember, pause the video, read the notes, go back to the chart, and double check the work. I gave you the highlights, everything you need from an inside the numbers perspective, from a trading perspective for the S&P, whether it's options, futures, micros, exchange traded products. It doesn't make any difference. They're directional trades. We have stocks on the move each and every morning. We have important support and resistance numbers for a dozen markets each and every morning. Pause the video, write down the numbers, put some of them on your chart, go see how price reacted around these numbers. If you're serious about trading, you'll actually do that. How about a detour into the Lazy Swing Trader Automagical Algos system? We had a price alert at 28.40. This was back in early January. 28.40 entry alert. This is an exchange traded product, the Chinese Internet ETF, AI, all that stuff. We already have a profit target in our pocket. It was a risk-free, emotionless trade. We got a subsequent profit target today. Profit target number 2 hit today, up at 33.70. Came close a couple days ago, came back for another shot today. 33.70 was exit number 2. Nice profit in K-Web. I think that's about 13.5% profit, give or take. Just think about what it looked like if you had the options on a 13.5% profit in the equity or ETF. You do the math. Lazy Swing Trader Automagical Algo System. She's been on fire ever since December. How you doing? What's going on in Camp IWM? Below those moving averages, the 50, the 20, and the 100, she's in no good shape. But I want to show you exactly what happened today. Let's depict this low, the low of the last breakup candle in the sequence, 223.21. I'm pretty sure I pointed this out already. 223.21. We put the marker there, and then we'll see what happened during the trading day, and you can see how that played a role. There was importance around that number. Mrs. Market knew about that number, even go down to a 5-minute chart. She knew about that number, opened below it, rallied back to it, rejected, got above it, rejected, got above it, stayed above it, came back for a back test, decided. There are no accidents or coincidences. This is a conscious decision to finish the day above that place. Period. Full stop. Do you think that place is important? I do. So here's what we'll say. You give up that place on a daily close, and the only thing you have left is this low here. Then you have a gap, the 200-period moving average, and she's trending lower. And then you have to look at this from a weekly chart perspective and say, hey, if she starts leaking, this is a bearish, flaggish type of situation after a move down. This will generally result in an ensuing move down, at least to run a test at some point of this breakup candle low all the way down at 214. How you doing? Flip side situation, close the week above the 20-period moving average. All bets on the downside are off until she's back below. That's the way it works. Also, IWM down about $2 today, 0.9%, so 3 times the downage of the S&P or the SPY, leading the market in the downward direction. Leading indicator, my favorite market leading indicator, Camp IWM. Now, what's going on with the folks down at the transportation department? Down $60 today, 1/3 of 1%, not really a big deal. We're not going to make a federal case out of it. It was on par with the S&P 500. Here's your daily chart. Below those moving averages, the convergence of the 50 and 20 period moving average with the 100 hovering above. That's a bearish, wedgish kind of thing going on. If she gets above the moving averages, you're looking at a bull case for higher prices. If she stays below and is contained by the moving averages, it's just a matter of time till you get another leg down. Don't forget, just a reminder from the MSF Masterclass, the 2025 forecast, if you will, had a February, March. What about the Q people? Anything wrong here? No, finished up 30 cents today. We'll call that flat-ish. It was less than 1/10 of 1%. But when you see this on the daily chart, you say, hey, look, they came in to run a test of the moving averages. The 20 just almost touched the 50, spiked through the 20, ricocheted back off of it, stayed above all the moving averages. Trend is your friend until proven otherwise. No material change for Team Qs. Look at the weekly chart. Anything going on here? Nope. Narrow week, well above all the moving averages. Nothing to see here. Move it along. What about the financials? Down 18 cents today, 1/3% on par with the spiders. Spiked into the 20-period moving average, ricocheted off of it back up. As long as she stays above all the moving averages, trend is your friend. If she gives up the 20-period moving average, she's prone to leak. That would open the door for the next breakup candle low in the sequence, $50.41. That would be the next area of intraday support. Write that down, put it on a sticky note. Smash mouth, no material change, down $1.36 or 0.5%. She's into this bunched up moving average thing. Again, depends on where she finishes the week. We're going to take our cues from the weekly chart. Above all the moving averages, we'll say that she's bullish to go up and fill the white space, fill the gap, stays contained by the 20-period moving average down here, and she's building the bearish, wedgish kind of thing. Couple of trading days left in the week. We'll see what happens as time ticks on. Had the makings of a big-time volatile day near the open, the overnight stuff. When you woke up this morning, you look, the tape is down. But we had a rescue operation early, kind of a quiet-ish tape anyway. She grinded up for most of the day in most of the markets. We take the market they give us. However, you'll note that traders in the live room are making plenty of money. You should hear these numbers being called out each and every day. It's like a secret society, a secret money-making society. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.